In short, mortgage rates have gone up recently because of the general election being called July the 4th. And I'll explain why that matters later on. But irrespective of all that, since 2022, mortgage rates have increased a lot. And right now, despite inflation dropping, despite interest rates staying stagnant at 5.25% and expected to drop later this year, we're not seeing any decrease in mortgage rates. Instead, they're still going up. Are banks being greedy, keeping mortgage rates up, keeping them high? Or are the headlines wrong and inflation is going to go up, not down later this year? In this video, I'm going to take you through why mortgage rates are still so high and when you should expect them to start dropping. But before we get into it, the reason this is so important to me is because I've spent my life building a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. So not only does that give me access to information you probably don't have, but getting this right is critical to mine and my clients' success. So let's get into it. Section 1, what determines mortgage rates? The Bank of England base rate, as you may already know, has a big influence on what mortgage rates are. The higher the base rate, the higher mortgage rates tend to be. But there's also a bit of plumbing in between that most of us don't realise and think about, and that's something called swap rates. It's actually interest rates and swap rates that dictate mortgage rates, because about 75% of us with mortgages will choose to take on a fixed rate mortgage rather than a variable rate mortgage, and that's important. So if we all took out variable rate mortgages, that is actually really straightforward for a lender, because in general, and I know I'm simplifying this, the lender will charge you the Bank of England base rate and then add a percentage on top to cover their costs and profit. If the Bank of England base rate goes down, your payments go down. If they go up, your payments go up. It dramatically reduces the risk to the lender. However, most of us take on a fixed rate mortgage with the peace of mind that no matter what happens with the Bank of England interest rates, your monthly mortgage payment is always going to stay the same over 2 years, 3 years, 5 years. This means the lender is taking a risk. If interest rates go up above what they're charging you, they lose money because you keep paying them the same fixed amount each month. If they drop below what they're charging you, they're making money, as again, your payments are staying the exact same each month. So banks and lenders need to manage this risk, and to do that they use something called the swap rate market. The swap rate is what your lender will pay another financial institution to get fixed funding for a certain period. So in the same way you're going to your lender asking for a fixed rate and what it will cost, rather than your lender taking the risk themselves of setting a fixed rate, they are seeing what the swap rate market will offer them to then offer you. So in short, it is these swap rates that are ultimately determining the fixed rate mortgages lenders are going to offer you. The higher the swap rate, the higher the fixed rate mortgages are going to be. Section 2, what determines swap rates? In short, a swap rate is a rate based on what the markets think interest rates will be in the future. So if swap rates rise, it signals that the market expects higher future interest rates, prompting lenders to then increase their mortgage rates to maintain their profit margins. If swap rates fall, it indicates expectations of lower future interest rates, leading to reduced mortgage rates. So if we look at those swap rates again, you can see how, although they are lower than a year ago for every time period except the 30-year swap rates, they are all now higher than a month ago, which is what is pushing mortgage rates up right now. But why? We're all being told inflation has been going down, that interest rates will go down. So why is the market pushing swap rates up over the last month specifically? Section 3, when are interest rates going to start dropping? Well, the reason why swap rates have increased is because markets have been pricing in the Bank of England reducing interest rates in June originally. However, due to Rishi Sunak recently announcing the general election in July the 4th, there's now an expectation that they will not be dropped until August or even September in the Bank of England meeting then. But why not sooner? Well, because the Bank of England has never cut rates immediately after an election since it was made independent in 1997. So quite literally, the general election being timed when it has is very likely holding up reductions in our mortgage rates. And it's very likely they will start to drop thereafter. How do you feel about that? And if you want to make me happy, please like this video and subscribe if you want to see more of me. See you up here.